Hey, good day, everybody. Welcome back to Insurance Made Clear. It's a video series that Graham and I are putting on about financial literacy around life insurance and what it does well and what fits with financial planning and who it may be of interest to. I'm Ken Dahl. I'm here with Graham Bergsma, and today we're talking about group coverage, group insurance. What does it typically cover? What doesn't it cover? Where does it fall short? And how to kind of implement, include that in with your financial planning goals going forward. So, welcome, Graham. Thanks for joining me again.
Thanks for
And
having me on. Always a
yeah,
pleasure.
we'll just jump right in. But a lot of people have group coverage through their work, which is great. It's a good benefit. Take advantage of it. If you have one time your income and you have the option for another second time your income, I say take it. It's a good deal. It's affordable, and that. But is it enough? That's really the question about group coverage. Is it enough coverage for you and for your family and your future needs should something unfortunate happen? So that's kind of where I want to open it up today, and just let me know your thoughts quickly on is it enough, or do we top it up, or is it you know people are they good to go?
Well, it's interesting coming off, the episode that we did on, how much insurance do you actually need? So this is actually kind of calling back to that. And as much as this isn't the best answer in the world, it depends. It really depends on what you want to get out of it, right? And I think your point on, group insurance being good, it really is, right? Like it's certainly better than having nothing. And especially if, you've got health issues, et cetera, and you may not be able to get it outside. Like it is awesome to have that peace of mind for some kind of coverage. And I think, it goes back to our conversation on that other episode about really sitting down and figuring out what you would want things to look like if you weren't around anymore. And is one or two times your salary, whatever it is. Also, you should probably know what that is. Like look through your benefits booklet and figure out how
Yeah.
much you have,
Yes.
and then have that conversation and say, is that enough? It's not for us to say, it's for, every individual to look at what they want the
Yeah.
world to
And
look like if they're not in it anymore.
And that's a great point about looking at your benefits to see what you actually have. I know a lot of people, I'm in Calgary, a lot of people in the oil and gas industry, they have a base salary, they get bonuses, they get stock options. So what is really that two times income based on? And for the most part, it's based on your base salary. So it's not really two times what you'll actually receive for
Yeah.
compensation in a given year. But anyway,
And
yeah.
and and how many people only live off of that base salary, right? Your needs, your expenses. You're not basing that off just your salary. You're basing that off of your options and I mean, we're not ended up in a Clark Griswold where you're expecting to put in the pool based on your bonus check and you just get a
Yeah.
jelly of the month club. But that might be what it was like, actually, if you were
Exactly.
just relying on your group benefits, as you were
Yeah. Yeah.
expecting that whole piece, and nope, you got your jelly of the month club.
And
It's a
and
nice jelly, but it's still the jelly of the month club.
it's exactly, and it's just good to know in advance as well. I mean, the worst time to find out what you have for coverage or not have for coverage is when something happens, and that's
Yeah.
usually, unfortunately, the reality of when people discover what they really had, or just as importantly, what they didn't have.
Yeah.
So it's but it's again, you referenced our previous conversation, which was a great conversation about how much you should have, and as you say, it depends for each family. But if you're a younger professional, there's a lot of years ahead, and you may want to replace a good chunk of that income or some of it, or the industry benchmark is 10 times, but there's no set formula. It's really for people to determine what they really want. The other thing I wanted to bring up about group benefits is, and a lot of people, when you ask them if they have life insurance, they have group benefits, and that's great, and they're happy with that. But it's not enough. But it's also that coverage is going to end at some point, and a lot of people don't think about that. If you leave the job, or the job leaves you, that coverage is gone. So and if you've had some health issue in the interim, your ability to purchase your own personal life insurance afterwards is restricted, if not completely gone. So it's important to keep in mind that that coverage is not likely going to pay out, which on the one hand is a good thing because you're still going to be alive. But and even if you have it until you retire at 65 or whatever, it's going to be gone at 65 then. So it's a temporary benefit while you're working, but that's it. There's nothing else after that.
Yeah, and I mean, is that necessarily a bad thing? No, that piece of insurance is meant to replace stuff while you're working. So the idea of you not needing it after you're working is understandable. But there's a lot of people that have, still outstanding mortgage payments. There's a whole lot of people that just bought a new house and they're 10 years away from retirement, but they're not 10 years away from paying off the mortgage, probably. So do they still want that covered? Like there are so many things to take into account, but your idea of, it doesn't go with you is becoming more and more important in my estimation every day because we're seeing it used to be you started in the mailroom and you worked your way up and you worked with the same company forever and ever and ever. And now, with access to information and employees kind of getting more power, that doesn't happen as much anymore, whether that's, layoffs from the corporate side or people understanding their worth and being able to go get it. People aren't staying with the same organization
Yeah.
for as long as they used to. And so, and a lot of people are tired of that side and starting their own business, right?
Well,
With all the tools that are available out there now to be able to start your own business, there's a lot of people doing that. And when you leave, if you didn't have that coverage, it can disappear. And so, again, it's looking at is it enough? And then, if you needed it either after you retire or if you were no longer with that company, if you can get it, if you're healthy and you can get it, it's probably best to have one that you can actually just own yourself and it goes with you wherever you go. And then you're still getting your group benefits if you have them, and that's a nice little addition.
right, and it's also important to keep in mind if you do need some coverage, because your job may end or something, or you may go work for yourself, as you mentioned, um, is that as you buy, for buying your own personal insurance, obviously the premium increases each year that you have
Yeah,
another candle on your birthday. So you want to be able to have that coverage or purchase it at a younger age and then just keep it. Now, one example is my own. I've worked for myself and I've been recruited to work for other people over the years. So I've got a mix of corporate and time and self-employed time. But I bought a disability policy like I don't know 25 years ago or something like that. And every time I went to work in a corporate situation, of course, they offered disability insurance. And as you know, with disability, you can't really benefit more than your salary. So I actually was overinsured because I kept that disability policy while I worked in the corporate world. I wouldn't have seen the full benefit if I was to become disabled. But I knew I would probably at some point be working for myself again. So I just kept the coverage, and sure enough, I ended up working for myself again. So rather than trying to buy that policy 10 years later at a higher premium,
yeah.
it's always there, and I still have it. It's still going on, and I'm working for myself now. So it's about looking after yourself. I mean, the corporate stuff is great. I know here in Calgary, I talked to one fella. He was in the oil and gas industry and an engineer, and he was working for one of the major companies. And they decided to downsize, but they still needed his skill set. So
Yeah.
they laid him off and they hired him back on contract. He still worked at the same desk he was at before, and he still did the same job, but he didn't have any benefits.
Benefits.
That's
Yeah.
one of the reasons why they want to, the corporate world. That's a huge expense for them. So they want to get people off of the benefits, and that's how that works. So it's really about future planning and making sure you have the coverage, whether you're working for yourself or not. So anyway,
Well, and it's an interesting point you bring up, right? Because we're talking about disability. Well, we've been talking about life insurance, but
life
you brought
insurance,
up
yeah.
disability insurance, and that's another whole thing, right? Where yes, it doesn't go with you, but it's also like they're not all created equal. And so, not to get technical into the jargon and stuff, but mostly when you have disability through your work, it's what they call any or any occupation.
Hmm.
And what that
Yeah.
means is basically, and for one, most people, when you're going on disability, it's averaging, almost 3 years, maybe three to 5 years.
Yeah.
But with the stuff through work, for the most part, if you're still disabled after 2 years, it kicks in on any occupation, which means if you can pick up a broom and go and sweep the office, you have to go back to work. And so you might not be able to do your job at all, but you can do that job, any job, so they stop paying you.
Yeah.
Whereas,
Yeah.
especially for people that are earning a lot more money and can get into what they call regular occupation or own occupation, it becomes a lot more valuable in that, no, like you keep getting paid unless you can do actually what you were doing before. And we know, you're getting better, but you might not be fully better and back to being able to go back and do your job at the same level that you were able
Hmm.
to before. And most people want to take the time to get better, whether it's rehab or whatever else it is. And the fear, like I know if I was coming back and I knew that I'm getting near that 2 year mark, I'm going to be more stressed or have more problems because I'm thinking, well, no, they're going to make me go back or they're going to stop paying me. And so, to your point, right, getting that stuff outside, that not only can travel with you if you go to work for yourself, but
Yeah.
is going to make sure that you actually can take the time to get better. To me, I
Yeah.
think that's what most people would want.
Yeah, and here I am again. I always take us on tangents, but just to help demonstrate the point, I didn't really mean to go into disability insurance, but it
It's a
just
big part of group benefits,
but
so that's
it's
what
a
we,
big part of
we're
group
talking about.
benefits. Yeah,
Yeah,
absolutely. And like I said, you want to have some coverage on your own, especially if there's a likelihood that you're going to work for yourself at some point. It's still cheaper to purchase that and have it even while you're in a corporate setting where you have extra coverage, but and keep that coverage. And then when you are working for yourself, you've already got that established at a lower premium. So that's a good deal. But the
yeah,
same thing, really, to bring us back to our topic, same thing with life insurance and group benefits is if you've got your own life insurance, you're in control of it. You own it. You can decide what to do with it. Nobody else is telling you what to do. With the group coverage, it's really your employer that owns it. They can change it, they
yeah,
can take it away, they can go to a different insurance company. You don't really have any control over that. So, if you're the kind of person who likes to, control as much as you can, that's certainly a good place to start and make sure you've got
yeah,
your own coverage, regardless of whether you're getting some through work as well. So, and,
for
and your
sure.
and your other point with disability about being able to work or do anything after 2 years, and another example is one fellow, obviously very unfortunate, was quadriplegic, and the industry comment was, well, they phoned him up and he could answer the phone. Said, oh, congratulations, you can answer the phone, you can be a telemarketer. So
Wow.
yeah, it's and disability is kind of that way. So that's a great point to bring that up. But that's another topic. I always keep getting us I keep getting us on tangents, but
We didn't even get
so
into critical illness. Maybe we'll
yeah.
save that for another day because
we
that's a
will
whole
we will
other.
save that for another day. But yeah, the point about group stuff, it's great, take advantage of it, but it's not the end all to be all. It's not going to be there forever. And I always recommend to people, just have your own coverage, what you need, get your own coverage, and uh, and then whatever the work situation is, you don't have to worry about it. And if something did happen while you were in a corporate setting and you had your own coverage, well, that would just be additional funds. I've never had anybody deliver when I'm delivering a check for a death benefit. I've never had anybody complain that it was too much money. So
Well,
if
and yeah, to your point, I think, whether you get it or not is one thing, but you should at least go and look at it and have that conversation. At least then
yeah,
you're making that decision as opposed to just, yeah, we'll
yeah,
be okay.
yeah,
Because that's a nice thing, right? Is you can look into it and figure out the numbers and go, maybe that's not for me. But at least put yourself in that situation where you can make that decision.
as we say, yeah, make an informed decision. Look
Yeah,
at it and decide, and it's always up to you. and what you do and what's most important for your family and so on. So
Yeah.
anyway, a great conversation, including tangents. Again, Graham. So thanks for that. I think we'll cut off this episode here, end it here, and as always, great chatting with you. We could talk about insurance forever. I know it's not not everybody's most exciting topic, but for us nerds in the industry,
Yeah.
we love to chat about it. So anyway, thanks, Graham. We'll catch you on the next one.
No problem. Appreciate it as always. Thanks, buddy.